You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo.
Hey, what's up, Market Moose? Mike from the Moose on the Loose. Happy Monday. I hope you're doing well. Today, a little bit of income to make you feel better. Labrador Iron Ore, a safe high-yield stock. Does that exist? Well, apparently it does. From time to time, you will find one like this. Not often. And there, of course, have some, it's not a perfect company, and we're going to take a look at it today, looking at the business model, the narrative, the numbers, and the risk. First things first, keep in mind, it's not a huge market capitalization. We're talking about like 2 billion market cap. So a very small company. I would qualify it as a small cap. Anything under 2 billion these days, I would probably say, well, it's probably like a small cap. So subject to high fluctuation. Be very careful about that. Super important. Paying a yield right now around 6.6, 6.7. So almost 7% yield. Average of the past 5 years has actually been 9%. So what's going on there? The payout ratio seems high. So is it really that safe, Mike? What are you talking about? So let's dig in. First, what's the business model? Well, it's a business that is based on royalties. The company owns mining leases and mining licenses covering about 18,000 hectares in Labrador. So a lot of land where they could mine and they could also give mining license. And what is great is that they own a portion of Iron Ore Company of Canada, and whatever is being pulled out from this land, well, they receive a 7% gross overriding royalty on all iron ore, and also 10% per ton commission on all iron ore product produced, sold, or shipped by the Iron Ore Company of Canada. So long story short, they own the land, they do not have the operation, and they just receive the money. So the narrative, the growth potential is all about this. You sit on a large piece of land, you let people do whatever they want, and whenever they want to take something out of that land, they have to write a check. That's an amazing business model, right? In terms of growth potential, well, it goes about demand, right? Demand for iron ore. So that will be driven by China, by North America. There are a lot of needs for iron ore. So if you want to have like a better idea of like how it's going to go moving forward, well, follow iron spot price. Follow construction. So the more there is new construction starts, infrastructure, well, then the need for iron will raise, and therefore Labrador Iron Ore is going to smile. It's a unique type of business model in the sense that they own that asset. So the economic moat is very strong. Yes, you can buy the iron elsewhere, but they have a large portion of land with a lot of iron, high quality iron pellets that is coming out of that land. So this is how they can protect their business model, and they are like just kind of like sitting and collecting cash, which is kind of cool. So that's the narrative. Like toll road on construction, on investment, on infrastructure, you get like royalties. That's great. What the numbers are saying? Well, the numbers, if you look at the dividend triangle, are quite shaky. We're talking about like revenue up and down, earnings up and down, and dividends up and down. So it's definitely not for the faint of heart. And of course, the entire stock price and dividend is linked to commodity prices. So when iron goes up, everything's going to go up. Your stock price, your investment, your dividend. When it goes down, same thing. And that's like an interesting way of doing business. Is Labrador Iron Ore will have up to offer a variable dividend, which is very smart. So the business model, the company has no debt. They have a lean operation, And then what they do is whenever they make more money on revenue and earnings because commodity prices are higher up or there's a lot more production, well, then boom, they increase the dividend. The next quarter, everything goes down, well, they decrease the dividend. So they don't mind about playing their dividend on one side or another. So depending on the timing that you invest, the yield will be around 6 to 9%. That's pretty much what you're going to see. Since mid 2023, stock price has been pretty stable around $30. So sometimes 28, 29, sometimes 31, 32, but that's really, really stable for the past almost 2 years or so. But the revenue and the earnings has not been growing that much since the big peak that happened in COVID. So between 20 and 22, revenues were up, earnings were up, and guess what? You got like a ton load of dividends being paid. Since then, it's slowing down, so you have a little bit smaller. So you really have to live on that if you invest in Labrador Iron Ore. I cannot stress the fluctuation enough. So just keep that in mind. In terms of risk, well, of course, if you're buying Labrador Iron Ore today and you're thinking, oh, I'm going to receive like a 7% yield forever. Yeah, that's not going to work like that. So you're not going to be able to retire on the yield exactly on the dividend. Sometimes it's going to be higher, sometimes it's going to be lower. So you need to have kind of like an agile budget, or it's just be a good addition to an overall strategy of income producing stocks, which would make a lot more sense. Again, last Friday, I told you about some of my favorite income products. You can actually download the full guide of 20 income products at moosemarkets.com/retirement. And in that episode on Friday, and I suggest that you go back there, I also explain that withdrawing 5, 6, 7% of your portfolio year after year endangers your retirement plan. It's the chances are you're going to deplete your portfolio, and one day your portfolio is not going to be enough to create the income that you're looking for. So again, if you're investing in Labrador Iron Ore at a one point that it produced like an 8% yield, and your intent is to generate 8% from that investment every single year for the next 25 years, at one point or another, your portfolio is not going to survive, and your shares of Labrador Iron Ore are not going to survive as well. So again, if you want to know more about that, just go back to last week's episode and download the free guide at moosemarkets.com/retirement. But yeah, there's no free lunch on finance. There are other risks about Labrador Iron Ore. Of course, cost of operation, strike, so labor, of course. If people stop working, well, it's going to slow down the production. If it slows down the production, it's going to slow down the royalties paid to Labrador Iron Ore. Another thing that is like the major break is, of course, commodity price. That's what we have seen so far. We have seen a slowdown in China in terms of for the construction, so they need a little bit less of iron ore. Similar situation in North America as well, with the tariffs and all that stuff going on. There is a chance that we're going to go through an economic slowdown. So probably a good timing to take a second look at Labrador Iron Ore, see if it's a good fit for your portfolio. That's why I wanted to highlight it today. I still like the fact that you have no debt, you get royalties. Very safe business model, because you're not going to get under a burden of paying a dividend, because whenever you receive less money, you just modify it accordingly. So the overall business model is a success over a long period of time. The company seems to be very solid, and the last risk I could see actually is how long the asset will be able to produce iron ore, and after that, what are they going to be able to do? That's definitely a big question. In the meantime, looks like an interesting play if you're looking for income. Again, not a buy or sell recommendation. I'm not your broker. Please do your due diligence, making sure it is a good fit for your portfolio. All right, Moose, that's enough for today. I hope that you have enjoyed my review of Labrador Iron Ore. Tomorrow, we are going on the other side of the yield spectrum with a review of Intact Financial. So if you love this podcast, please take a second, give me a 5-star rating on Spotify or Apple Podcasts. give me some comments. We can also talk on YouTube. I read and try to comment back on all the comments that I get on YouTube for those podcasts. All right, though, so we're going to talk again tomorrow. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.